Trade wars are easy to win. Those were the words of former U.S. President Donald Trump as he launched one of the most controversial economic policies of his administration. But was it really that simple? In this video, I'll break down the history of Trump's trade war, why it started, how it played out, the long-term consequences, and the latest developments in his trade policies. Donald Trump's trade war didn't start out of nowhere. Throughout his 2016 presidential campaign, he repeatedly criticized what he called unfair trade practices, especially by China. One of Trump's main arguments was that China had been taking advantage of the U.S. through massive trade imbalances, intellectual property theft, and unfair subsidies for its industries. He also blamed free trade agreements like NAFTA for harming American workers and outsourcing jobs. His solution? Tariffs. In 2018, Trump imposed sweeping tariffs on steel and aluminum imports. Soon after, he targeted China directly with a 25% tariff on $50 billion worth of Chinese goods. China retaliated immediately, imposing its own tariffs on American products including soybeans, pork, and automobiles, hitting American farmers and manufacturers hard. What followed was a tit-for-tat escalation, with the U.S. and China slapping tariffs on hundreds of billions of dollars in goods. By the end of 2019, the trade war had affected over $500 billion in trade between the two countries. So, did the trade war achieve its goals? Not quite. While Trump claimed the tariffs would bring manufacturing jobs back to America, the reality was more complicated. American farmers were among the hardest hit. China cut back on buying U.S. agricultural products, leading to a major financial crisis for farmers. The Trump administration had to roll out a $28 billion bailout to help them recover. Manufacturing costs soared as U.S. companies relying on Chinese imports saw their production costs rise. Consumers paid the price, with higher prices on goods ranging from electronics to everyday household items. Studies showed that American businesses and consumers, not China, bore 92% of the tariff costs. The trade war shaved off an estimated 0.3-0.7% of U.S. GDP and led to stock market volatility. But the effects weren't just felt in the U.S. The trade war had a global ripple effect. China turned to other markets to replace American imports, strengthening trade ties with Europe and other Asian countries. Global supply chains were disrupted, causing slowdowns in industries like automobiles and electronics. Other countries were forced to take sides, with some benefiting from new trade opportunities, while others suffered from market uncertainty. In early 2020, Trump and China signed a Phase 1 trade deal, temporarily easing tensions. China agreed to buy more U.S. goods and the U.S. scaled back some tariffs. But the deal didn't address the deeper structural issues Trump originally targeted, like China's industrial policies or intellectual property theft. Even after Trump left office, the trade war left a lasting impact. Many tariffs remained under President Joe Biden, signaling that tensions between the U.S. and China weren't going away. China accelerated its push for technological independence, investing in domestic semiconductor production and reducing reliance on the U.S. Global trade patterns shifted, with countries diversifying their supply chains to avoid future trade conflicts. The Trump trade war redefined global trade, proving that economic battles can be just as disruptive as military conflicts. In his second term, President Trump has reignited trade tensions with several countries. In February 2025, Trump imposed a 25% tariff on all steel and aluminum imports, set to take effect on March 12, 2025. This move eliminated previous exemptions and aimed to protect domestic industries. On February 1, 2025, Trump signed executive orders imposing 25% tariffs on all goods from Mexico and Canada, except for Canadian oil and energy exports, which received a 10% tariff. These measures were justified under the International Emergency Economic Powers Act and were set to take effect on February 4, 2025. The administration also imposed a 10% tariff on all Chinese imports, in addition to existing tariffs of up to 25% on many Chinese goods. China retaliated with tariffs on U.S. exports and other measures, further straining relations. On February 26, 2025, Trump announced plans to impose a 25% tariff on goods imported from the European Union, citing protectionist trade policies. These recent actions have raised concerns about a renewed global trade war, with potential implications for the U.S. economy. Thanks for watching. If you found this video informative, please like, subscribe, and hit the bell icon to stay updated with more deep dives into today's most pressing economic issues.